All right, so there's been a lot of tension going on around the world, and right now the market is telling us a very, very interesting story. So I'm going to break it down for you so you can be a trade smart into next trading week. So right now we're looking at US dollar DXY, right? So as we can see, we did close bullish on this weekly candle, and we closed very strong. So what does that mean from a candle perspective? We can expect price to continue to go bullish into next week. So we usually expect price to retrace down at a certain percentage and then start pushing back up higher in this direction. Now you're probably wondering, why does US dollar matter, right? US dollar matter because a rising dollar puts a lot of pressure on assets like commodities and the stock market, right? And clearly the stock market is showing that. And also liquidity start tightening in the system as well too, right? So right now we are in this transition phase right now, right? But we're starting to break out of this transition phase. As you can see, we was in this nice, range bound, and now it's starting to break out of it, right? And for those who've been watching, like I told y'all, once we get above here, this will be a clear signal to see price start pushing up higher, right? Especially into areas like this that have not been targeted yet, right? So what I want to see going to next week is I want to see price maybe just based, like I said, based off a candle perspective, we can see price retrace down a little bit back into this range, no lower than 99.214, and we can see price start rising back up higher. And if that does, right, then that's give us a clear confirmation that there's still more pressure going on in the market, right? Now let's look at yields, right? So now we have yields. We can see yields close bullish for the week as well too. Oh, before we go to yields, go back to DXY real quick. Go to the daily time frame. As you can see on the daily time frame, we actually in a nice uptrend. We closed bullish on the previous day too, which confirmed that our bias is going to be overall bullish going to next week, right? So we can see here that our next support level will be around this same 99.189, right? So I expect to go to no lower than this. If it does retrace back down to this level, then continue to go back up higher. Now back to yields. So as you can see on yields, we can see yields actually close very bullish on this candle. Again, from a candle perspective, right, when price closed bullish, right, we expect the next week candle continue to be bullish. So we expect price to retrace down first, then start pushing back up higher. And why does yields matter? Because yields, for one, yields increase the borrowing costs for one, and that also put pressure on the stock market as well too. So think about this: you have the U.S. dollar, and you have a rising dollar, and you have rising yields. That's a bad combination right there for the stock market. So let us know that put a lot of pressure on the market, right? Which we can clearly see with S&P. And then we have the VIX. The VIX got to a highest we closed bearish, but we still got to a highest of 35, and it closed at 27. So it's still above 22, which is an important level to pay attention, because when it's above 22, it lets you know that fear is in the market. And the fact that it got to 35, that means the market is starting to panic, and that also put pressure on the market. So all three of these combinations, rising yields, rising US dollar, and the VIX starting to rise too, all that is a bad combination, and that lets you know there's a lot of pressure on the market, which means we could be seeing the market, start to, really drop if it continue to rise up like this. And then we have oil, right? So now we have oil. Oil is at 98, and it got to a high of 119 per barrel. So the fact that it's, for the past 2 weeks, oil just skyrocketed. I mean, gas prices. Right now, gas prices is like around 350, which is crazy. Some even higher than that. So, uh, obviously, higher gas prices is not good, or higher oil in general is not good, because what that tells us that can increase inflation, which increase energy costs, and increase transportation costs, which make everything overall higher for us, right? So um, all four of these are definitely not good signs. All four of these put a lot of pressure on a lot of stuff. So, and the reason why I look at DXY, right? I don't trade U.S. Oil. I don't trade yields. I don't trade the dollar index. But the reason why I pay attention to these things, because when watching stuff like, I do trade gold, I do trade S&P, I do trade UJ. So when watching pairs like that, right, that can help me make proper decisions. So, like, for example, I know if US dollar is rising, right, I know, guess what? We can expect UJ to continue rising. If I know US dollar is going to continue rising, then we can expect EU to continue dropping. So stuff like that. Um, if I know a rising dollar can put pressure on the market, then I know S&P can start dropping. So like this stuff like that. So let's go into S&P, right? We can see here finally S&P finally broke out of this area. So we can see how S&P was in a nice uptrend, but now we can see how that trend is starting to slowly break. This is a clear breaking structure right here. So we can see if we put this here, we can see how it was in this phase. Price retest up, broke, retest, came back down, and now we're going lower, right? So now we're in this phase of price retesting, broke out, retesting, going lower. So that retest was this right here, and it closed lower. So we could be seeing S&P continue to drop actually down lower. So we go down to the daily time frame, we can see how we're in a nice downtrend. We just crossed the threshold of the 50-day moving average, which let us know that we're in a nice transition of seeing price push down. Once it crosses over the 200-day moving average, that lets us know that we are definitely in a nice strong downtrend, and we can be seeing price definitely continue to drop. So I'm definitely bearish on S&P. And then let's look at gold. So gold is very, something very important going on with gold, right? So we can see here that we're in a nice uptrend. We're right at we're still above the 5,000 level, which is still a major support level, right? And you can see how gold barely actually moved this week, right? And the reason why gold is really in like an indecisive stage. And the reason why, because you have fear in the market. So you got fear in the market, but then you also have a rising dollar and a rising yield. So it's just in between of trying to see what's going to happen, right? But we did close bearish, so we quite don't know what could happen. Really, it's really just more of okay, hey, will fear continue to take more over, um, or will yields eventually start going back down? So that's why I say with fear going on and everything, and all this and rising dollar, all that is making everything just kind of. Cause usually when there's fear in the market, that's actually good for gold. That actually make gold go up higher, right? Like people are literally panicking right now. But then you also have rising U.S. dollar and rising yields. That can make gold kind of indecisive on what to do. So it's just waiting for a confirmation, more clarity of what's going on around the world. So me personally, I wouldn't even do anything with gold quite yet. I would just kind of wait to see what gold going to do. Now, from a candle standpoint, gold did close bearish. Usually when gold closed bearish, right, especially on 2 weeks, we can be seeing price either push up and break down and break down lower. So why I can say this, if gold break below 5,000 and close below 5,000, then yeah, we can start seeing gold slowly start pushing back down. But as long as it continues to stay above 5,000, we could be seeing gold continue to push up higher. It just depends on people. It depends on how much fear continue to increase, because if fear continue to take more over, then yeah, it can continue to support gold. But if also uh, U.S. dollar continue to rise and yields continue to rise, then it's going to just be really indecisive of what I want to do, So, and then if we kind of go down to the daily time frame, we can see how it's just kind of starting to get more choppy. So you can still see the trend is slowly weakening too. So we had nice huge pressure, price came back up into this range, and then slowly pushing back down. So we still kind of like in that area, price slowly transitioning. The trend is definitely weakening, very like indecisive what I want to do. So I would just kind of wait for a confirmation. You can see on the previous day it closed very indecisive, right? So that's my market breakdown for y'all going to next week. Now I do trade UJ. I do want to show you what UJ did real quick. UJ did something very interesting too. So you can see UJ. UJ did exactly how I expected. From a quarterly perspective, we can see how. Just to give out a quick little lesson on candles, right? So I actually expected this, right, for price to do this. So we can see how on UJ, we can see how actually UJ, did exactly as expected. So on last quarter of going to the end of the year of last year, the ending, we can see we closed bullish. And what the price did, it opened, eventually retraced down, at 3%, and then it made a clear flip and started pushing back up, right? So As long as DXY continue rising, we can expect UJ continue to rise as well too, and we close bullish, so we can expect this to continue to push up, right? And even though I'm not, giving y'all the signals when to get in, I'm giving y'all the framework. So you really pay attention to what I'm saying. If you trade anything like EU, you know EU and GU is gonna be dropping. That's common sense. You know what I'm saying? So other than that, the goal is not trying to avoid losses or trying to catch home runs. The goal is surviving long enough to win. I'll see you next market breakdown. Peace.